Hi guys, welcome back to another video. So in this video, I'll be going through Keppel Infrastructure Trust earnings and looking at their new assets on their performance and what are the recent events that are going to happen soon. For people who are new to infrastructure trusts, they are a group of business trusts which are another category that is different from REITs. They tend to hold stable assets such as ports, infrastructures, and telecommunication. However, having a good fundamental and sponsor similar to REITs is still important. Unlike REITs, they do not have to adhere to the government regulations of having at least below 50% leverage ratio and interest coverage ratio of 2.5 times. Lastly, they do not have to have a payout of at least 90% of their income. However, this does not mean that they can just go around anyhow spending their money. So before we start, I hope that you can hit the like, subscribe, and comment on what are your feelings with regards to Keppel Infrastructure Trust. So let us take a look at their key highlights. So the important thing to look at is the distributable income, where they have stated that it was 65.5% year-over-year increase, with new assets compounding at 38.5% of the contribution to the year-over-year increases. This actually meant that the old assets have actually done well as well, providing a 27% year-over-year increase. Moreover, their earnings before income, depreciation, and appreciation came in at an increase of 40.5% year-over-year, which is very decent. However, looking at the year-over-year results might be a bit inaccurate because due to the recent purchases of the different assets. Later, we'll look into their quarter-over-quarter earnings in order to determine the true performance of the assets. Other portfolios' performance are decent, with Exxon, Philippine Coasters securing additional tenants and building new tanks, while KMC is also doing well. However, they are still looking into selling Ipson. After looking into their earnings from the new assets, I honestly feel that selling Ipson might not be a big concern and might actually be a good thing, as it will provide the management with more funds to purchase newer assets. So let us take a look at their results. So for the energy transition section, we can see that it consists of quite a few different assets, and the distributable income came in at 100% increase year over year. However, this is because there are new assets that came in, so please do take note. And it was because of BKR2, the European wind farm, and the Aramco. As you can see, for Q1 of 22, it only has City Energy and KMC. So there are not much actually changes with regards to the assets, with the European wind farm expecting the first drop down in assets in second half of 23. So we'll expect more contribution from this wind farm sooner or later. Whereas for City Gas, there's not much difference, with the customer base increasing by 1.4% year over year. However, one thing I want you to take note of is that for the KMC, although it has achieved 100% contracted availability, this is not a very good news because their full year distributable income is expected to be negated due to mandatory debt repayment for June 2023. For their environmental service side, it actually brings very good news. Previously, EMK was having a negative distributable income of 1.9 million due to a one-time incurred cost. My last video, I've said that we should expect a positive result, which is seen here, where the distributable income actually came in at a positive value of 4.4 million. The water assets have minimal changes, which is due to a higher electricity cost. So for their distribution and storage section, there is good news as well. Ipson continues to perform well and is actually acting like an individual company, where it continues to make acquisitions and growing the core business to increase their distributable income. However, like the management has previously said before, they will be considering to leverage on the Ixom's strong performance to explore on debt recapitalization strategy, which is to sell them to get the funds to purchase new assets. The Philippine coaster also have a good news with higher distributable income. However, their utilization rate actually dropped from 90.5% to 86% due to a short-term fluctuation of demands. However, they have said that additional demand storage are already requested by an anchor customer, therefore building new tanks. Thus, even though the utilization rate dropped, their distributable income actually year over year still increases. However, sometimes year over year distributable income comparison do not actually tell the full story. So let us look into their quarter over quarter results. So I have actually created a table to compare the Q over Q results, as it shows more accurately of the real performance rather than just year over year. However, do take note that this does not take into the fluctuation in the different revenues, where some quarters, some assets might perform better than this current quarter. So, how I got the Q4 of 2022 results is by taking the results from the announced result of the H2 of the year 2022 minus the Q3 of the results of 2022. From there, I will be able to get the individual values of the respective fourth quarter results. From there, we can compare with the first quarter of the 2-3 results to actually see the difference in the performance quarter over quarter. However, if we look at the Q over Q results, their values looks much more normal, where the distributable income for the Q4 of 22 was 84 million, whereas for the Q1 of 23 came in at 73 million. So this is much lower, and partially was due to the removal of the KMC distributable income, which is about 10 million. Let's look at the individual contributions. So for the energy transition, it has slightly dropped. However, if you look at the assets, the Aramco gas pipelines actually dropped. This might be due to lower oil prices, whereas the European wind platform also came in lower, but hopefully will recover back in the next few quarters. The Germany wind farm is performing very well, providing a 19 million of income, much higher increase from the fourth quarter, but this is also because it was purchased at the fourth quarter of 2022. For the environmental service side, it has an improvement from 14 million to 22 million in the sector. This was what I mentioned just now, where the most improvements came from the EMK distributable income improvement from a negative 1.9 million to a positive 4.3 million. For the distributable storage, they are not doing as well, from 40 million dropped to 23.4 million. This was due to the decrease in the income from Ixom quarter over quarter, and similarly Filipino coast as well. This might be due to seasonal changes in the income, and we will continue to observe it for the next few quarters. So looking at results of quarter over quarter actually brings a different lights rather than comparing just the year over year. Therefore, it's important, and you can apply it to other REITs or analysis of other companies as well. Okay, so let us take a look at their debts. So as you can see here, the gearing ratio is at a very high value of 42.5%. It is high, but although the management want to ensure that they actually have adhere to the government limit of 50%, like I told you at the start of the video, business trusts actually do not have to. So this actually means that even if in the event if they actually go above 50, they are not forced to sell or come up with cash, unlike REITs, to bring down the leverage ratio. in the upcoming rights issue, they aim to raise 300 million in order to pay down the 438 million of the bridging loan facilities. And in their presentation, they have actually mentioned that this would actually bring the leverage ratio back to 35.6%. This is an estimated value, so it will be around this range. Based on the current share price, if they issue at a 50 cents, which is the 4% discount that they have mentioned based on the market share price of 52 cents. It equates to about 600 million shares and about 12% of the total units. Based on the management's presentation, it will still be an accretive distributable income, and I favor this as the management are more actively trying to improve the income of Keppel Infrastructure Trust. By clearing the bridging loan, it will also help in bringing their hedge remaining debts to be at 90%. This makes it more resilient for KIT to resist against the interest rate hikes. So let us take a look at the return of investment on the new assets that was purchased just last year. So how I calculated the ROI is by multiplying the recent Q1 results by 4 for each of the assets to annualize it and divided by the purchasing prices. However, do take note that this is based on an assumption that the distributable income is stable through the 4 quarters. So looking at the each assets, the Aramco gas pipeline came in at a 12.6%, whereas for the European wind farm is at 8.6%, Germany wind farm at 21.3%, and lastly EMK came in at 5.5%. However, this is just an estimation of the return on investment of each assets. This full year would be a good rate to measure the return on annual investment by analyzing the distributable incomes throughout the 4 quarters. So far, the management are doing well with the new assets, as you can see that the return of investment are looking promising and with a decent distribution. So another thing I would like to highlight on is their dividend payout ratio. Dividend payout ratio is the percentage of how much the company pays out based on their income. KIT had been one of the well-known trusts which actually pays above 100% dividend payout ratio previously, this which makes it very unsustainable in the long run. And that was one of the main factors why it caused a lot of investors a lot of uncertainty with this trust. However, this year is quite different with their payout ratio at an average of 86%. This actually makes it very flexible for them in accumulating cash for more assets or the possibility of increasing dividends. So if we look at this table, the payout ratios for the first half of 21 was at 92.2%. Following that, at the second half of 21 and the first half of 22 is not so well, as it came in at 101% and 109% respectively. However, the second half of 22 results after the new assets acquisition start kicking in with the higher distribution, the payout ratio has actually dropped to a significant lower value of 70.6%. So this is a good thing, and with the issue rights, they are confident that the dividends will still be sufficient. So by looking at the first half of 23, if we assume that if we have a conservative assumption that the number of units increased by 15%, the distribution required to be paid based on the same DPU will be at 109 million, which is taken from the increase of 15% from the 95 million. Whereas for the distributable income, if we assume it to be the same as the first half, it will be at 147 million of distribution income, and that will equate to about a dividend payout ratio of 74.1%. However, do take note that this is just a very rough calculation and we will see what would be the results in the next quarter. In many investments, there are definitely risks to take note of. Similarly, KIT also has some. There are expiring concessions in 2024 and 2025 of their two assets, which is the Senoko Waste-to-Energy plant and the Sing Spring Desalination plant. So we'll see if there are any updates with regards to the extension. But I feel that once PUB approves the purchasing of Keppel Marina East Desalination plant, it might be enough to replace these two assets in the event if they are failed to renew the concessions. So let us look forward to the issue rights. And if you are confident in KIT and you are shareholders, it is a good time to actually purchase more. And if the share price of the issue rights comes in at 50 cents, it will equate to about a 7.6% dividend yield, which is a very rare price that we don't usually see nowadays as compared to the past. However, please do more due diligence with regards to more research, and you can comment below on any other things that I've actually missed out and you would like me to highlight on. Thank you for watching. If you enjoyed this video, please hit the like, subscribe, and comment on any feedback or with regards to KIT. You can also watch my previous KIT analysis and other REITs videos if you enjoy them. Thank you, and to the next video.